What's up, guys? It's your boy Looney, and today we're gonna have some fun with a meme stock versus blue chip showdown and what's really worth your money. So make sure to load up Robinhood on your phone and let's dive in. So on the meme stock side, we have contenders Riot and Neo. These are very volatile, high risk stocks, meaning they move a lot in the short term. But here's the cool part. Even though they bounce up and down in a short term, they don't trend like that far long term. If you look at that yearly basis, they're net even on Riot. This makes the premiums for selling options very juicy. If we go to trade and look at these options and just any selling put, the IV is very high, 88%. But on the other hand, we got blue chip stocks like Apple and Microsoft. These are solid, reliable companies. They're less volatile, so the prices don't jump all over the place, and you get consistent growth with dividends over time. These are slow and steady plays. So let me tell you why I like trading Riot and Neo. Yes, they are risky, but because they jump around a lot while staying within a range, I could take advantage of high implied volatility to sell options and collect higher premiums. If we just look at Neo, it jumped all the way up to $7, and I was just patient because I have a covered call that it was losing a lot of money. I was at $5, and I was losing a lot at the time. It was up to $7, and I was down a lot of money. But I just stayed calm because I've seen this stock before. I know how it operates, and it pulled back. Now it's at 516, which is pretty interesting. Why would you be happy about it pulling back? And that's because of the selling option side. I want it to grow, but I want it to grow over time. And this is a good way of making it act like a blue chip stock. And allows me to sell cash secured puts where I'm being assigned shares at a strike price. I believe the stock in long term at that $4.50. That's what I have it. And if I'm holding these shares, I could sell covered calls to make extra money while I wait for the next move. And it's all about managing your risk while collecting the premium. So here's an example. I sold a Riot $8.5 put pretty recently for $22 in premium, and it was at the money at the time, meaning the stock was close to $8.5. Now Riot is up to $9.25. So I get to keep the premiums without being assigned. But on the other side, I'm selling covered calls at 9.5 for $11 each, meaning they add up to 22. So if Riot goes above the 950, I sell the shares, or in my case, I'm going to roll. But I'm okay with Riot staying within that range. I think that's perfectly fine, and I get to collect the premiums. Now, what do I prefer? I think it's a good balance of having both. I have that safe Apple, Microsoft, these blue chip stocks that keep me safe and keep the emotions out of it. So if Riot decides to pull back 10%, I'm not worried because I have high quality stocks like Apple and Google that back me up to let me work with my money and make these trades. And I am doing a lot of trades weekly, monthly, and I go over these trades on my Discord and I share them in my level 2 community. If you guys look at my past month, I'm up 10%. I had a feeling that Riot was going to go up. I mean, you don't always have that feeling, but I was very confident that momentum was shifting going upwards. And I share these trades. So on my Discord, I'll share all the trades I'm looking to do throughout the week. And it helps you build your portfolio to the next level. So thanks for hanging out and listening to this video. Make sure to like, subscribe, and leave a comment if you're trying out these strategies yourself. Until next time, peace.